Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. Our phone number is 888-912-1190. Use that number to answer the trivia question for a 5-pack tanning certificate given away during this show. And that certificate is not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is miscellaneous trivia. Today, we do have a special guest, Iraj Zolnasr, to discuss the current real estate market. Iraj, welcome to The Best of Investing.
Thank you, Edward. Happy to be here.
Oh, excellent. So I've known Iraj now for a few years. We've gone to the same real estate meeting once a month. And tell us a little bit about yourself and how long you've been in the business.
Well, I've been in the business for over 20 years, Marin resident for probably 40 years or so. Love Marin, love doing business in Marin. And also, my wife is also kind of in the business. She's with Old Republic Title and senior vice president, manages the Marin and Sonoma offices of Old Republic Title. So we're really real estate connected. We're really in touch with the market and what's going on, and love what I do. So, and all my clients become my friends, which is a good thing, right?
That is.
That's how it goes.
That's helped quite a bit. Your wife being in at a title company.
Actually, it does not.
It does not.
It does not. Contrary to what people think, the fact that she's in the business is probably counterproductive to my business.
I mean, I'm not asking like, are there any special deals, but there's probably maybe at least some advice, of title issues that you can.
Well, no, I think, the only thing that it does do is we just, it's in our blood. We see homes all the time. What she has is all confidential. So she doesn't talk to me about business. My side of the business is obviously confidential. I don't talk to it. But by that I meant is that we all socialize with the same group of people. So we all socialize with a lot of realtors. So you don't get business from realtors, because they have their own clientele. So that's why. But other than that, it's great. We love what we do.
Well, that's great. I just love that. Tell you what, let's get right into it.
Sure.
What do you see as the state of the market, real estate market right now as it is?
Yeah, it's a really interesting market. I think, as we have all buyers and sellers that deal with, constant question. And what happens is, you say you're in real estate. So at every meeting, at every social event, everybody wants to know. And what is so interesting that it almost changes kind of maybe week to week. But overall, it's been a very strong real estate market for the past 6 months. About a year ago, we were running the stats. About a year ago, June of 22, 20% of homes sold under ask, which meant what? 80% of homes sold over ask.
Yeah.
That percentage started increasing. In other words, the percentage of homes that were being sold over ask kept decreasing, going down, hit the lowest point in January of 23, with only 25% with about 30% of homes selling for over ask and 70% selling below ask. So, and we know that was, kind of unusual beginning of the year. Lots of things were happening, and in our neighborhood, as Marin, we had rains and hails and all kinds of things happening with the weather. But that trend is actually reversing itself again. And today we have 40% of homes selling under ask and 60% of homes selling over ask.
It's interesting because it almost seemed like there was a time when everything was going over asking.
Right. Right. Well, everything is like a year ago, 70%, 80% of homes are going over ask.
Yeah.
So it is a lot of homes selling for over ask.
Sure.
And, for us in Marin, a lot of it has to do with the lack of inventory.
Yeah.
People wanting to be in Marin because this is such a great area, and, our living the standards are so high, and, so people want to be here. Inventory is low. So if you want to be here, you have to pay.
Yeah, yeah. It's interesting. The houses that were going for under asking, was it just that they were just priced too high, or was there something strange with those houses generally?
Yeah, I think generally it's always price driven.
Yeah,
It's always price. And market is very price sensitive because people these days, they have information, what is going on. Zillow and, Coldwell Banker and other websites do provide them with a lot of
yeah.
background information. So anybody can look and see what Zillow says the house is worth. And sometimes if the homes are selling, not selling, but the owner says, it should sell for more, we just tend to, the house just doesn't sell. It waits
Yeah.
until we have a
Okay.
price meets the market.
All right, we're going to cut to our first commercial break here. Here's our first trivia question. What does the Raven say in Edgar Allan Poe's book, The Raven? And again, Iraj, if you know the answer, don't say anything yet. Call for the audience, call 888-912-1190. The first caller with the correct answer is going to win that tanning certificate, which, by the way, is worth over $100. Again, here's the question. What does the Raven say in Edgar Allan Poe's The Raven? All right, stay with us. The Best of Investing. I'll be right back. Don't touch that dial. Welcome back to The Best of Investing. Again, I'm Edward Brown, your host, along with my special guest, Iraj Zolnasr. And Iraj, let's see if you know the answer to this question. What does the Raven say in Edgar Allan Poe's The Raven?
And this question, I honestly don't know.
Oh, okay.
So
That's okay.
I will leave it to the audience.
Leave it to the audience. Okay, well, the answer is nevermore.
Nevermore.
Nevermore. Yep. Okay. Let's see here. Want to make a quick mention here for the Transcendence Theater. I saw their production in June, and it was phenomenal. They've got some more productions coming up. One is called the Enchanted Evening, but that's in September. The next one in July 28th is called The Full Monty. They're taking that Broadway show and they're making it a kind of a Broadway musical. Check them out, Transcendence Theater. You can go to bestnightever.com. All right, and again, like I said, I've been there for many shows, and they always do a phenomenal job. It's really, really exciting. So, Raj, we're talking real estate here, and before we cut out, you were talking about sometimes the sellers are trying to figure out exactly what the price is. And
Right.
sometimes Zillow is very accurate, and sometimes they don't know because maybe houses got remodeled, but
Right.
I'm not sure what their analytics are.
I think Zillow is more accurate in a subdivision format
Yeah.
when all homes are very similar, they're homogeneous, square footage wise and look wise. But Zillow tends not to be very accurate in a place like Marin, where our homes are eclectic. You have a beautiful home next to an older home, next to a home that hasn't been remodeled. So our prices are not necessarily accurate based on Zillow. Every homeowner loves their home. We all do. I'm guilty as any other person, and I feel like my home is better than the next door neighbor's home. But as realtors, our job is to be independent and give honest, straightforward advice. Sometimes the client does not like that honest, straightforward advice, and if they listen to us, I think they'll benefit because ultimately, when a house sells, it's good for everybody. I think the common question or a common criticism is that, realtors want to price it cheap, so they sell and they make a quick buck. That's the most common thing that everybody says.
Sure.
Right. While I honestly think maybe in a buyer's market that may be more accurate, in a seller's market that is never accurate because there is such low inventory that buyers are always the people who determine the price. Seller can put a price on it, but buyers are the ones that actually pay the price, put their money where their mouth is.
Absolutely.
And buyers are the ones who know, more than anybody else, because they've seen all the homes. They've seen 50 homes or 20 homes or 10 homes in our situation where we don't have a lot of inventory. And if they're willing to pay, they're going to pay whatever they can to get your house. So you'll never underprice a house in a seller's market. It will always go. You'll just end up getting to your price faster.
Yeah, it's interesting when we sold our house many years ago, we were talking to a couple of realtors, and I kind of had to educate my wife a little, because the wives get, I'm attached to my house too. And I always think, my house is nice too, but my wife, she's a little bit more of the decorating home nesting person.
Of course.
She did more. And when we were talking to the realtor, and I remember telling her, sweetie, listen, if the realtor really thinks that painting the inside green with pink polka dots is going to sell the house quickly, that's what we do. Now, I don't care what you and I want, because we're not buying the house. We're selling the house. So it's whatever and it's funny because the realtor we hired, she did a very nice job. The stager, I could not believe the kind of stuff that they put into the house. I looked and I said, what are you, again, I had to back off and say, what are you doing? That's not the kind of furniture that belongs in this kind of a house. But you know what? I had to back off and just trust between the realtor and the stager. And sure enough, it sold for, within a reasonable time at a reasonable price. Again, that's many years ago, but.
Yeah, no, it's absolutely true. I think, you hire a realtor that you trust, and, you want a reputable realtor, you want one that you trust, you want one that has good experience, and you trust them and their advice. But you actually pointed out a really nice point, which is staging. That is another objection or objective that sometimes we see with sellers that don't want to do staging on their homes. And the argument is, well, I spent X amount of dollars, I'm not going to get it back. And, my suggestion or advice has always been that staging is more like, you take your furniture and stuff that, what you just mentioned, you like out of the house, and you bring something that is just very homogeneous, very bland. So everybody can like it. You don't want it to be a special taste, because when you're looking for buyers, you want as big of a pool as possible. You don't want to narrow your pool. So the more narrower, the harder. So stagers come in, they do the house the way that should be staged, and for the most number of buyers.
Absolutely. Yeah, we're going to cut to our next commercial break here. Also, I guess one thing I would tell the sellers is, listen, time is money. So if the house sells for a month faster than it would by having staging, figure out what that cost is on the loan. Right. Absolutely. Okay. Our second trivia question is, let's see here. Which continent? Actually, no, we're going to ask that next time. Here's our question. What is the chemical symbol for potassium? You have to go back to your chemistry. You have to go back to your chemistry class for that one. What is the chemical symbol for potassium? All right, call 888-912-1190. First caller with correct answer wins that tanning certificate. Stay with us. You are listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. One more time. I'm Edward Brown, your host, along with my special guest, Iraj Zolnasr. And Iraj, let's see if you remember your chemistry classes here. What is the chemical symbol for potassium?
To be honest with you, chemistry was my worst subject.
And listen, I didn't know that when I set up these questions. I'm sorry. I
can answer business questions, but not chemistry.
No, not chemistry.
So
okay.
I apologize.
Don't apologize. Okay, the letter K.
Okay.
Which I'm not
potassium.
sure. Yeah, potassium. I know it's got kind of a strange one there.
Yeah. That's why chemistry was my worst subject.
No, it's like there's no logic.
It did not make sense to me. Exactly.
Okay, so Iraj, let's get into this part of it. Now we're going to ask you about the effect of interest rates on the market, and I've mentioned this in previous shows that one of the things that I can see, and tell me if I'm right or wrong on this, is the fact that a lot of people refinanced when interest rates were really low during COVID, et cetera. And they may have gotten 2 or 3% interest. And now if they buy a new house or buy a house, they can't replace that with that interest rate. They're gonna have to pay, 6% or so. And
Right.
that's gonna keep a lot of people from putting their house on the market, don't you think?
Correct.
Okay,
Absolutely. Absolutely.
okay,
And that's really the reason why we have such low inventory right now, is because most of us have refinanced our homes into such lower interest rates that effectively we're out of the market, because you're at 2.5%, 3%. Now the interest rates are at 6%. The identical house at 6% will almost cost you double. So even if you change it at the same price, so your house that you're in is going to cost you double the money if you sell it. Well, why would I sell it?
exactly. So are a lot of people then, are they just gonna remodel their houses? Yeah, are you hearing that?
Yes, I'm hearing that. People are going to just keep their homes, remodel it. So the only seller pool that we really have coming on the market are people who have to sell, people who
Yeah,
are moving out of the state, people who, unfortunately, the estate sales or
yeah,
trust sales, those things. We still are not seeing. I mean, will short sales, will foreclosures happen? I think they will happen in every market,
yeah,
regardless. But because home prices have appreciated so much, it is hard to imagine a homeowner willing to let go of a home where you have so much equity in it. They will
yeah,
try to somehow sell it and recoup some of that equity regardless. The effect of the interest rate increase has been really on my side, what I see, to the buyers who were in the market about a year ago, and they were, looking at buying a home at 3%, 3.5%, and looking at what they could afford with what payment. And now they have, effectively priced themselves out of the market because this, now they're at 6%. So they can no longer afford the same house.
yeah.
That's the dilemma that they're in. And regardless of how much we gave them advice of, buy it and worry about it later, as far as you may be overpaying a little bit, but hey, buy it. But people, waited for whatever reason, and now they're out of the market.
Yeah, my son had purchased the house just as interest rates were going up, and he
Yeah,
locked in a little less than 4%. And he was upset because he realized interest rates were going up, but he said, I wish I would have done this a month ago,
yeah,
and would have gotten 3%, and now it's like
yeah,
3.75 or whatever it was. But
yeah.
still, he's looking like a hero for that.
Oh yeah, I mean, we all remember. You got some gray hair. I do too.
Yeah, oh, yeah,
First homes we bought. I mean, our first house was at 12% interest rate. We remember those days. We remember those seller financing days
oh
where,
yeah,
there were contracts were more complicated. So I think the young people kind of forget, and they were this lull that, oh, it's 2.5, 3% are going to stay here forever.
no.
So it was just a once in a lifetime event.
Now, do you think there'll be some more seller carryback, uh, maybe in
I
second
think,
position?
yeah, I think it has to be. I really do. I think, if you really need to sell for whatever reason, and the interest rates remain to be the same, and I mean, obviously, right now, as well as I do, unemployment still continues to be strong. In other words,
Yeah,
low unemployment.
yeah,
If that trend changes and more people become unemployed, that means less buyers, and less buyers means if you really need to sell your home, you need to be more,
creative with it.
aware of the market and creative.
Yeah,
Yeah, so those will come.
okay. And are there still a lot of cash buyers? I mean, there was a time when China, a lot of Chinese buyers in San Francisco,
Yeah,
and that sort of eased up a bit. But are you
yeah.
seeing that still?
Oh yeah, I think, initially, or right when I started in the business, there was a lot of Chinese money.
Yeah.
Before that, there were Russians coming in.
Oh,
Then it was the Chinese. And while that has slowed down, I think now it's really the people who cashed in their stock options and have a lot of money in the
Uh,
stock market. So we still do have a lot of cash buyers. You know, 4, 5, 6, 7, $10 million. Not a problem. I mean, obviously, as you get into the 10, $20 million range, you figure those people have a lot of money.
oh,
So
yeah,
cash is not a
exactly.
big
Yeah.
deal.
Well, especially I would think maybe some people from the Middle East with, oil prices a little bit higher, that
Yeah,
sort of thing too.
yeah, yeah.
Okay, you ready for our third trivia question here?
Okay.
Which continent is closest to Antarctica?
Okay.
Which continent is
Content.
closest to Antarctica? Call 888-912-1190. First caller with correct answer wins that tanning certificate, which again is worth over $100. Also want to make a mention here for Alcatraz tours. But no better way to see the island of Alcatraz than to check out Alcatraz tours.
Tours,
See the
yes.
experience. Have you ever been to Alcatraz?
I have not, but I know we were involved with a company that did all the Alcatraz glasses when they were remodeling it about 30 years ago.
Gotcha.
So,
Okay.
yeah.
All right, stay with us. Don't touch that dial. The Best of Investing will be right back. Welcome back to the Best of Investing. Edward Brown here, along with Iraj Zolnasr. Iraj, which continent is closest to Antarctica?
Well, this one I think I know, but I'm just going to let the callers decide.
No, that's okay. That's okay, because we're pre-recording the show. So
Australia.
No, actually, it's South America.
South America.
Yeah,
it was either of those
isn't
two.
it Chile? That the bottom of Chile is closer.
Yeah.
Okay.
Yeah.
All right. So now let's see here. We went through some of these things here. How do you see the market going forward?
Yeah, I think the lack of inventory will continue because of some of the reasons we just talked about, of the seller pool being so limited.
Yeah.
I think people who were investors in the area, I think they're cashing in. I know of several who are selling their homes, cashing in their profits and either 1039ing it out of state, perhaps going somewhere else.
Yeah.
Or just cashing in their money because they're getting close to retirement age and taking, wanting
the 1031 exchange would be for non-owner occupied.
Correct.
You're seeing a lot of
Correct.
those. Okay.
Yeah, we are seeing, the investors who had several homes and several investments, they are part of the market as well right now because they're just, again, I've seen several of them pulling money out and 1031ing it out of the state.
Gotcha. Okay.
Yeah.
All right.
But it will continue.
I want to shift over here for just a minute. So State Farm and Allstate pulling out of California for new policies. How is this affecting the market? And how is it for people who already have insurance in place?
Yeah, good question. So I think for people who already have policies with Allstate or State Farm or Farmers or any other insurance company, they're pretty well protected. They're not, being canceled for the most part.
Okay.
Isolations, yes, but it really affects the new purchasers, the buyers who are coming in. And so what happened is, obviously in the past few years with the effect of the fires and everything, the insurance company had huge losses. All the insurance rates are approved by the insurance commissioner. So and the insurance commissioner was not approving, increases in rates. So what happened is the insurance companies like State Farm, they said, well, if you don't increase my rate, I'm going to move out of state.
Gotcha.
Partly what they did was, they increased their parameters of homes that would qualify as being in fire zones, as an example. So a home where, I know a home that's in Tiburon, in the middle of Tiburon, all of a sudden, 3 years ago was an average insurance. Then they, marked it as a fire zone. So now it's hard to get insurance for it. But with the departure of State Farm, Allstate, and the insurance pool getting really, really shrunk, what is happening is the rates are going higher. We know of a story, we were talking in our office of somebody who wanted to buy a home in Mill Valley. This is drastic. if you're sitting down, this is really drastic. The seller was paying like $2,000 insurance for an annual policy on the house.
Yeah.
The buyer's insurance premium is now going to be $15,000.
Holy smokes. Which company was that gonna,
We didn't discuss the company, I guess,
Gotcha.
obviously, but it has gone so much higher because of that. I mean, that difference essentially will put you, before you were qualified to buy a home, now you can't qualify because it affects your borrowing ability.
And it's not like you pay it one time. I mean, you'd have to pay that every single year.
Every single year. So what we're advising all our clients and buyers is to get your insurance bound ASAP. As soon as you go into contract, find out how much the insurance is, make sure you can find insurance. So now California Fair Plan that is offered by the state of California, which at some point in time was really used as emergency stopgap for people who had homes in the middle of nowhere and nobody wanted to touch them. California Plan would insure them. But now it seems that it's becoming more normal for average folks who have homes in Mill Valley and, Fairfax and other places where and Marin is full of, nature. I mean, we love the fact that we're surrounded by nature, but that does affect our insurance premiums.
So what would that stopgap insurance basically, what instead of paying 15,000, what would this couple pay?
So California Fair Plan, what they do is they insure the building only, right? So versus if on your normal home insurance policy, you have content, you have liability, you have reconstruction insurance, all of that is just kind of like bundled into one policy. With California Fair Plan, all they do is just the reconstruction part of it.
Well, that's the most important part too.
That's the most important part, but they don't pay for content, they don't pay for liability. So you have to really, and they do take longer. So versus a traditional insurance company, you might call your insurance agent and the next day you would be bound. With California Fair Plan, get ready to wait maybe a week or two and more pictures and more
how much
red tape.
What would the price, like in that example?
Okay, so in my example, a normal policy, of 1,500 or 2,000 is going to be closer to 5,000 when it's all said and done. Where the California Fair Plan is probably now going to be priced at what you used to pay for the whole thing. And now you have to go buy insurance for your content, liability from another carrier.
So it might still cost 1,500 to 2,000, but that'll just be for the building.
Correct.
And then I wonder how much it costs for contents and liability.
Probably, potentially about the same, just because it's an independent policy that somebody else is coming in and writing.
It's still a lot better than 15 grand.
Still better than 15 grand. No, but
that's actually a pretty good way of doing it, because again, what is someone to do if they live in the middle of nowhere and there's just no insurance company that's going to cover it, but yet you have to have insurance with your lender. I mean, you got to do something. It's almost like workers' comp insurance in a way.
Right. It is.
Has
it is workers' comp, flood insurance. They act kind of like the same way. But I think, in a situation where you have, an independent insurance company, they tend to be kinder to their clients versus if you had California, now you're dealing with the state of California. Good luck.
Good luck. I mean, you know what though, the odds of putting a claim in are pretty small. So it's really just a matter of just satisfying the lender.
The lender, correct.
And then, if God forbid, if you actually have an accident, then
correct.
you need someone.
All
right. We don't have a trivia question, but stay with us. The Best of Investing will be right back with some closing comments. Don't touch that dial. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with my special guest, Iraj Zolnasr. Iraj, first of all, you're much of a wealth of knowledge about real estate. How do people get a hold of you if they have questions?
Well, the easiest way is to just call me or text me. It's 415-271-1342.
Oh,
415-271-1342, and Iraj Z, IRAJZ at outlook.com.
okay.
Those are the best ways to get in touch with me. Yeah.
All right. Okay.
Love to chat with you. Anybody who has any questions, I'm more as, I approach real estate as more of a consultant than sales. So if you guys have any questions, do give me a call. Happy to chat.
Great. Thank you so much. I'm going to move over here to what's going on at Pacific. Well, so one of the funds at Pacific Private Money that I am a part manager of is the Pacific Southwest Note Fund. And we're still paying just a flat 8.5% to the investors. Best part of it is that there's no lockup. So if people want to get their money back, they just need to give us 30 days notice. If for some reason there was a quote run on the bank, well, then we'd have to kind of spread it out, but at 8.5% and very conservative rate of return, very conservative investment, because we're buying these discounted notes very conservatively. Everyone seems to be pretty happy. So, there hasn't been a problem. So what goes on with that fund is that we're buying these notes where the loans are already in existence, and we're buying them from banks and hedge funds, et cetera, at a discount. And the reason that we're able to do that is because these bigger companies want to get them off the books. Originally, we were buying discounted seller carryback notes that we were kind of talking about before. That market's still out there, but it's a little bit drier, and as we need to put money to work. And so we've been partnering with a company that provides us these notes, and they stand behind the notes. So if anything goes wrong, they won't let us probably foreclose on it because there's so much equity. They're going to say, no, we're just going to make sure you get your monthly payment, and they'll either pay us off, or they will substitute with a different note. It's kind of up to us. And if for some reason they don't do any of that, well, then we get to foreclose. And there's extra profit to be made, because you got to figure if a house is worth on average, let's say 100,000, because we're doing this out of state, and the average loan on the books is only 41,000, and we're only paying 29,000 for that. The odds of us losing are not so high. I mean, you'd have to have an economic catastrophe, because I don't think we've ever seen houses go down 75% in a period of 2 years, because that's how long these loans. So nothing's ever guaranteed, but everything's based on risk and reward. So we just pay the clients the 8.5%, and they're not going to get rich off of us, but they'll get the steady income every single month.
Edward, how long have you guys been in business?
Well, gosh, okay, so I've been in the business since 1991. This fund got started in 2020. The company Pacific Private Money, Mark has been around. The CEO has been around. He's been in real estate all of his life, but he started his company in 2008. So kind of an interesting time to start. The real estate market was still going down in 8, 9, 10, and yet no investor lost money. So that was kind of a nice little feather in his cap. And then, and obviously on this fund, it's only about 3 years old, but there's been no losses, not only to the investor, but to the fund itself. Because again, there's just so much equity in all of these loans that it would be very difficult, let's put it that way, to lose money on that. So
it's a good niche. It's a really good niche, and it's something that all investors can really, now anybody can invest.
You have to be an accredited investor. So you have to have
what does that mean?
You have to have a net worth exclusive of your home of at least $1 million, or make 200,000 a year if you're single, 300,000 a year if you're married. And for more information, go to pacificprivatemoney.com and check out the Southwest Note Fund. All right, we're going to cut out for our thoughts for the day. So I am so terrified of asking my wife to clean up after breakfast that I've been walking on eggshells all day. Thought you'd like that. And my wife complains I never buy her flowers. To be honest, I never knew she sold them. All right, tune in next week to The Best of Investing. We're going to be giving away more prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.
So long.